Hi guys, this is Tony Javier, founder of Real Estate Prodigy and creator of the Total Real Estate Blueprint. In this video, we're going to talk about private money loans. This is one of my favorite subjects to talk about. It's near and dear to my heart. This is something that fuels our business and has allowed us to really explode what we've been able to do in the last several years. So have you ever asked yourself, man, how do people buy real estate? How do people buy real estate with no money down? How you've seen those shows on TV flipping houses. Man, someone has to come up with 300 grand to buy a property, another 100 grand to put into it. Where do they come up with the money? Chances are they did it with private lenders. This is something we do on a daily basis. We've done millions and millions, I'd say maybe even tens of millions at this point with private money lenders, and we continue to have millions of dollars out in private money and continue to get additional private money and get referrals from other lenders. So you're probably asking yourself, and we've had other people say, hey Tony, how do you do it? How do you buy so many deals? How do you create relationships with the lenders that you have? And now I'm going to show you. All right, so let's check it out. So I'm going to show you the pros and cons of private money lending, but first I'm going to show you how a private money deal looks like. Okay? So a typical private money loan is going to be between 0 and 1% for fees up front. They're called points or origination fees. So if it's a $100,000 loan and it's 1%, that's $1,000. If you deal with private money lenders and you can negotiate very well, you can do what we do and negotiate no points on the front end. Private money lenders, just to compare to hard money lenders, are people and individuals that will actually loan you money directly. They're typically not institutions, they're not banks, they're not companies. They're individuals that maybe have money sitting in a checking account or a savings account that's earning them below 1%. And if you meet them and you've got a program where you can earn them potentially double-digit returns, they're going to invest it with you. That is what a private money lender is. And typically you can get it for no points up front. Loan to value is going to be 70 to 80% of the after repair value. So as opposed to hard money lending, as opposed to banks, you can get 100% of the purchase price and the renovations loaned to you as long as that's 70 to 80% of the after repair value. So just to use some round numbers, if a property is worth $100,000 after it's fixed up, and you only need $70,000 to buy it and fix it up, so that $70,000, maybe $50,000 to buy it and $20,000 to fix it up, the lender, your private money lender, will loan you that full 70%, so you don't have to come up with any money on the project. Pretty powerful, right? We do this on so many different deals. We do this on, sometimes up to 10 deals a month, right? It's such a powerful way to buy properties, and it's why I love it, and that's why you see a smile on my face. Loan fees, unlike other banks or hard money lenders, they don't charge any fees as long as you negotiate that and get that up front. Interest rate with private lenders, I've heard as low as 4%, which is pretty ridiculous to me. I've only met one person that's been able to get under 6%, which is someone that was around 4%. Typical private money lender is going to be between 6% and 15%. Now, for our private money lenders, we've pitched private money lending so many times that we know what people want, and we've found out the magic number is right around 12%. One of the questions you can ask, which I'll probably talk about here in a little bit, is you'll ask your private money lender, what are you getting on other investments? And if they say they're getting 1% on a checking account, then you could probably say, well, would you be happy with 6% secured by real estate? And then just start from there and figure out what they're wanting. For us, we just made it simple. We deal with some heavy hitters. We deal with some people that are very sophisticated investors that we know get between 8 and 10% minimum. So we've just made our program 12%. Made it very simple. We're going to restructure that pretty soon and start lowering our interest rates and doing some different creative things. But right now we pay 12% and no one balks about it. Okay? Now we've got so many deals and we've got so much money to work with. then now we're going to lower our interest rate, and that's why we're kind of revamping our programs, because we have so much money to play with. I know, tough problem to have. No payments or interest only. So if you ask your private lender, would you be okay with getting paid 4 months down the road or 6 months down the road when we sell the property, or at the end of the 12-month period, if that's the period that you negotiated that could potentially take you that long to fix and sell the house, which I hope it doesn't take you that long following our system. But we pay our private money lenders right now interest only, and we pay it monthly. And the reason we do that is because we like them getting that check in their hand every month. They get that $600 check, $1,000 check, $2,000 check, whatever it is, every single month, and that gets them to think about us, and it gets them to see their money working for them, right? In the beginning, if someone says, I don't really need the money, and I don't care if I get interest payments monthly, then negotiate to do the payment at the end when you sell the property, and it just comes out of the proceeds from closing, okay? A typical private money deal is going to be between 6 and 12 months. What we do is we negotiate 12 months, just in case we want to do like a short-term rent to own or something like that with a buyer. But we typically only use the private money for around 3 months, 4 months, and if a big project takes longer to sell, sometimes up to 6 months. But for me, I would negotiate 12 months if I were you. Okay. Appraisal fees, no appraisal fees. Private money loan is going to be, hey, here's the deal that I have. Do you want to fund it? They may want to look at it. They may not want to. Right now, it's a simple email for us and the address with some details to our private lenders. They say, hey, when do you need the check? We tell them, and the deal's closed. So we don't have appraisals. We don't have inspections or anything like that. So there's no fees, okay? So recapping this, do you see why this is beautiful? Do you see why we do this on pretty much all of our deals? Fees are low to zero. We can do interest only on our payments, sometimes no payments if the lender's okay with that. No appraisal fees, 12-month deal. It's a beautiful deal all around. And for those of you who don't understand how this works as far as security, when you're pitching this to your private investor, it's secured by a note and mortgage. So the note is going to detail how the payments are made and the personal guarantee if you give them one, which I don't recommend doing. I usually do it for my private lenders just to make them feel good about it. But if you're newer into this business and you're able to negotiate, or they don't ask for a personal guarantee, you don't have to. But the promissory note's going to say whether it's a personal guarantee or not, what the payment structure is, when the note is due and payable, and then the mortgage is what's filed with the courthouse to secure it to the property. So that if you sell the property, that lender has to give permission to sell the property and tell the title company, who's going to collect all the proceeds, what the payoff is. Don't get too confused with that. That's something that we dive into different modules about. So if you want to look into those modules and see what that's all about, I just wanted to put that out there so you can kind of visualize it a little bit better. Okay? So let's talk about the pros. Obviously, lower interest rate than hard money. Less money down than banks or hard money loans. Usually no money down. We get cash back at closing. If we do a deal and it's $40,000 in renovations, we typically get that close to that $40,000 back once the title company takes their fees out. So with banks, if you do renovation loans with hard money lenders, you don't actually get that cash. You actually have to do the renovations first and then request inspection and repairs and things like that. So that is a huge benefit to private money lending. Now, when you get that cash back, you need to make sure you set it aside for the renovations. Don't be tempted to spend it on other things. Make sure you use it on your properties, okay? Typically no fees if you can negotiate that. Close in days. You can typically close within just a few days if you've got a good relationship with your private lender. And because you're dealing with individuals that have money usually hang around with other individuals that have money. We've gotten, millions of dollars in private money from referrals. We take care of our lenders. We pay them on time. We close our deals. We have never refused to pay a lender back. We've never defaulted on a lender. We've never done that. We pay our lenders, we take care of them, and they take care of us. And so they send us referrals. So make sure you take care of the people that you're dealing with on that side of it, because they're going to have people that they know that have money as well. So take care of them, they'll take care of you. Okay? Cons to private lending. Okay? I struggle to come up with cons of private lending, but I'm going to throw a couple out there. This is a higher interest rate than banks. Now, for me to be able to close quicker and not pay any fees like appraisals and origination fees, to me it's worth it paying a private lender a higher interest rate. If it's a big deal that we're doing, we've got one right now that I knew was going to take longer, and I also knew that it was a bigger deal, so I went to the bank. You know, I had to put a little bit of money down on it, but knowing that it was going to be a 6 to 12 month process, I was willing to pay less than half the interest over that period of time and save money in the long run. Okay, it is a higher interest rate than banks or cash, obviously, but it's still something that is very powerful because you can close quickly and has many other benefits. It's not a long-term loan, so if you negotiate it, you could potentially get a long-term loan, but most private money lenders you deal with don't want their money tied up for that long. So a year is pretty typical. 2 years to 3 years is potential. You can talk to them about that. I actually have heard of private lenders going 5 to 10 years out, but that's not very typical. So if you can negotiate that, more power to you, but most private money lenders want shorter term. And honestly, that's it. Those are all the cons that I could find of private money lending. Okay, so just to summarize for you, well, actually, got ahead of myself there. So let me give you some tips to raising private money. You know, like I said, we've done tens of millions of dollars in transactions with private money, and so we know a little bit about it, and we know what lenders look for. We know how to talk to private lenders. You know, at this point, I don't deal with that much. I've got the president of my company who deals with 90-some% of that. You know, if I come into contact with someone, in fact, I met a gentleman in Switzerland not too long ago, a fine young gentleman. We've become actually really good friends. He's an investor with us, you know, and he brought on another individual that they pulled money together to invest with us. And so we know a little bit about it. So let's talk about some tips to raising private money. So just like I mentioned that gentleman in Switzerland, you know, I've met someone at a Tony Robbins seminar. I've met someone, where did I meet? Oh, at the gym. I met a private money lender at the gym. So you never know who's going to want to invest with you. You know, friends, family, I guarantee you probably know a friend or a family member that wants to invest with you. And if they don't want to, maybe they know someone. So don't be afraid to talk about your program. Don't be afraid to talk to people about real estate, because people are interested in real estate. You know, obviously you bought into my program and you know the benefit of real estate, and you know you're interested in it, or else you wouldn't be here. So talk to people. Met a gentleman at a gym one day, and within 12 months he had $1 million invested with me. Met that gentleman in Switzerland I was talking about. He had $600,000 invested with us within like a couple months. The gentleman at the Tony Robbins seminar, he's done hundreds of thousands of dollars in transactions, and is a good friend as well. So don't be afraid to talk to people you come into communication with. You never know who's going to have money. I ran into people that I didn't think had a dime, and they invested with us and had quite a bit of money. So talk to anybody you can about your program. Ask individuals what interest rate they're getting right now. So if you run into someone and you talked about it and they say, hey, tell me a little more about it, one of the first questions I ask is, well, before I tell you about it, what kind of programs are you involved in? What kind of things do you invest in? What kind of interest rates do you typically get on your money? And if they say I get 1%, 2%, 5%, you kind of know that you can start on the lower end of that range. If someone says, well, typically I get 20% and secured by real estate or something like that, you may go, oh, well, you may have to tweak it a little bit. You may have to offer 15% to start out with. If you have to offer 18% and you can flip it quickly, there's nothing wrong with that. but typically someone's going to be okay with 12 to 15% if they understand your program and they see the benefit to it. But make sure you ask them first, because that's a good negotiating tool, because you can ask that question, hey, if I could double your interest rate from 6% to 12% and secure it with real estate, is that something you'd be interested in? Their eyes are going to light up and say, yeah, tell me more about it. Okay? Negotiate your terms. Don't be afraid to negotiate an interest rate or a structure that works for you. Ask for referrals. Even in the beginning, if you're negotiating terms and say, hey, by the way, we may be looking for some money in the future. Is there anybody else that I could potentially speak to? If you have a good relationship with that person. If you don't, wait until you do some deals with them and then ask them that question. Hey, by the way, do you know anybody else who would be interested in this fine program that we have that would be willing to invest with us? So people who have money typically know people with money, okay? And raise lots of money. It's not that hard. Once you have your program together, which we give you, a lot of what we have in our program, a presentation and things like that with our program. Once you know that and you're confident with it, you're going to raise lots of money. I'm telling you, it doesn't take only maybe one person to change your whole game, to change the way that you do business. You could run into someone tomorrow that has $1 million that doesn't know what to do with it, that's just sitting in an account, and they're looking to invest it somewhere. We've ran into that situation so many times where, people just have money sitting on the side and they don't necessarily want to do the stock market. It's too risky. They don't, they don't want to do mutual funds because there's a lot of fees involved with that. Oil is up and down. They don't want to touch that right now. So just talk to people. Talk to people, show them your program, and before you know it, you're going to have tons of money to be able to put into your projects. So I really hope that helped you. This right here has been a game changer for me in my business. Once we started raising money and having all of this money to be able to invest in our deals, just a huge game changer. So go out there, guys, be great, and make it happen. So we'll see you guys on the next video. Thank you guys so much for joining us on this free training. If you liked it, which I hope you did, please share the link to this video on your Facebook page. And also you can go to this website right here and find out how we've built a 7-figure automated real estate investing business and how you can start or automate your own investing business with the tools and systems that we have available. So like I always say, take what you learn here and go out there and make it happen. So we'll see you guys on some future trainings.